Mic check. Mic check and screen share check. Okay, good. All right. Good evening, guys. Ken Torres Capital Nightly Strategy Podcast for August 7th, 2024. Start with the sniper trade of the day. This is 10 minutes on XLI. Here's yesterday's close. Here's the open. Here's the 10-minute high and low. This is yesterday's closing VWAP here. The 10-day VWAP, the Bollinger Band mean, the 30-period regression line, the PSAR, the 150-day regression line. We get a entry on a breakout above the OR10 in the third bar. Immediately sells off. I take the exit at the 150-day here as it makes a new low in that bar. So that's about a minus 0.8. Hold support, I take another entry at the same level on an emerging dragon. That also loses minus 0.8. When it crosses below that 150-day anchored VWAP and the Bollinger Band mean and the PSAR flip, I get short. It's the same risk box. When I get this little pattern and the rest of the market is selling off hard, I just visually inspect that. That feels like a visual collapsing dragon. So I put a second position on. And now I'm going to manage the exit more tightly because I got two positions on. The RL10 turns red. It crosses the 10-period or the 5-period anchored VWAP. It reverses. I take a 1-2 exit. And the first position gets about 2R. Second position gets about 1. Call it 3. The collapsing dragon occurs. I re-enter short, one position, same risk. R10 reverses. I take the skin of the dragon exit for an additional R. So 3 and 1 gives me 4 minus 1.6. So we end up at about 2.4 for that series. Check or hold? Hamad. A strength was maintaining the zero state. He probably did some over trading, learning the idea of marking off the range of what happens in the first hour to identify the movers. The first trade on any symbol is a test trade. Pay attention to what information it provides. Still working on when to go to no lose plus dinner for 2, when to trail with the PSAR, when to trail with the dragon. Look at my lesson and guidance on the jump stop. which essentially is if you get the entry, by the time you get to 0.7, your stop should be at about 0.2. You should be able to lock in plus 0.2. That gives you 0.5 of your risk. Then let that continue to grow until you get up around 1.0 or 1.2. And then you can just pick up the trail. You're either trailing 1R or you just revert and let the PSAR be your governing stop. After you get to no lose plus enter for 2, as soon as the PSAR crosses that, you start picking up the PSAR. When the R10 is moving up, the PSAR is fine. When the R10 rolls over, you want to raise your stop to the skin of the dragon, which is normally up in here by that time. And that gives you just that little bit of wiggle room from here to here. I'm going to test the exit that just says, hey, what if on the bar that closes, like if you had some bars like this, and if this bar is the bar that on the close made the RL10 go negative, just exit. Instead of waiting for the dragon skin, I'm going to test to see if that earlier exit saves you the extra loss to here or whether it prematurely cuts something that might recover. So we'll find out. But that's why you jump. The important one is the jump from the PSAR to the skin of the dragon when the RL10 rolls over. Here's 3.2 in DIA, catching the big wave. Here's 2.5 in the Qs, catching the big wave, and that's missing this entire leg down. Minus 0.6 in EWZ, kind of get ground up a little bit, no worries. Plus 0.4, that offsets it by getting realigned in EWW, but that wasn't much of a mover today. And then energy was minus 1.6, trying to make too much of this in here. Here's Jonathan with minus 0.56. So this was short, exit, entered, stuck around too long, should have been out around here. Skin of the dragon when the R10 rolls over. This is a reasonable short. Perfect would have been on the VWAP. 1, 2, we should try to be getting out here at the skin of the dragon, and then we could be long here or here, and then that would have been the big payoff. This caught a 2 cut, and then that's the short. My goodness. Oh, that's okay. He was out of the office. Got it. Still minus 0.56. Not too painful. Some learning going on there. And then he does a good job at 0.96 in DIA and then working this up for practice. All right, let's take a look at the trading report for tomorrow. The 150-day look back, we're already well back to the middle of the range here at the 150-day anchored VWAP. We've come such a long way from 566 all the way down to 518, 10% sell-off. On the daily form here, this is 30 days, daily bars. Here's your 30 period anchored VWAP, sort of like the long-term normal. When that crosses below the Bollinger Band main, you see the Bollinger Band main was rising and then rolls over. That's telling you that we're on notice for warning, danger on this side. Then 3 days later, you get this. Now, the recovery yesterday tested and came back. It opened up and then sold off hard to here. So we're still above support, but tomorrow is going to be the interesting day. It has to break above 532 to be legitimate recovery. Any effort below 518, you should be Hulk smashing that to the short side. Deep in the winter. And you can see on the 30-minute version here, this is our daily box here in the yellow. There's your 3-day or 5-day anchored VWAP, the 3-day anchored VWAP. So we're actually, still stabilized here. It's not a panic until it gets below this 515. So there's a little bit of wiggle room, but I'd be starting to get short on a violation of today's low. Here's the 150-day and the Bollinger Band mean. That begins tactical longs. This is where it becomes healthier when it gets above today's high, and then soon thereafter above the 10-day anchored VWAP, targeting the 30-day VWAP, and then the 10-day high up here. A lot of tactical trading tomorrow. Bullish, volatile, harsh, oversold, and all the short terms. Volatility screaming to the downside. Lots of buy on dip opportunities because they're still above the 10 period or the 200-day moving average, and they're oversold on 10-day. So yeah, this was a sharp system shock. That's why the overreaction system is in play here. The overreaction, that's this one, reacts when there was a nice bull and then some news events happens and you get price action suddenly drops all the way down here discontinuously, and now is starting to try to recover. That's what, and the overreaction play is an effort to try to get that play back to the previous peak. If these fail, then that's a sign more pain and suffering coming. And the market SPY is just in an oversold condition anyway. So you're getting a double goodness on the market here. So that's going to draw algorithmic trading attention on the long side tomorrow. I'll be ready for that move. In the Dow, everything was getting crushed. You got half of them are on the better than 2-to-1 on the auto framer. You got multiple 5DDs to choose from. Auto framer showing plenty of opportunities there. Oh, I skipped over the ETFs, excuse me. Yeah, the ETFs are all mostly in the auto framer condition as well. Let's see, in the daily squeezes, Merck, Chevron, and Tesla. Tesla and Microsoft and Intel all look pretty interesting because today was a disappointing day, but their range was small, so they're near the top of the stack for small range. So there could certainly be a tech recovery tomorrow. Auto framer, you see just how many choices there are above or better than 2-to-1 on the reward to risk. I would favor the ones that were already positive today, so you could get second day momentum. Yeah, so the EWW traders out there tomorrow, be ready for that. It's at 2.3-to-1, but had a nice recovery day, and there's still more room to go to the upside. So that's why I like that. Winter is dominating both sides of the aisle here. You see the Dow suffered more than the ETFs in terms of harshness of sell-off. A few isolated cases of goodness. I traded some U.S. Steel and Cliff Natural Resources today, and that was a good payoff. Devon Energy stands out like a sore thumb. Had a little bit of recovery in the globals here in Latin America and Mexico. And Japan is a flight to quality. You can see that on this one here, that's that discontinuous sell-off that triggers the overreaction. Yesterday was an effort to recover. Today was a violent stomp down of that. It was a gap up and then got crushed. So we're still, the slope of that 30 RL is more than two standard deviate. Here's the average. It's more than two standard deviations below average. That was precisely the place last time where you got this nice run. So we still got to see some bottoms being put in, but that's creating the opportunity to get long. So see both sides of the trade here. And finally, the Z-scores tell us what we kind of already know. The RL90s losing steam, the 30s falling out of the river and starting to become a problem. The 10 is almost down to Z -3, and we're definitely rigged for heavy weather. All right, that's everything for today. We'll get this published and posted and be ready for them tomorrow.